Hey Alpha fam, welcome back to another episode of Alpha Commission. Today on Alpha Commission, of course, we're going to go over that sideways and down price action on the Bitcoin chart. And if we do just jump over to the macro, we can see that we, of course, are still in a bull market, bull market, bull market, bull market, bull market. Guys, we are in a bull market. So, of course, we're going to continue to be in this bull market until we break down from that Bollinger Band's midline on the weekly, and so far we have not done that. So if we jump over to the daily here, we can see that midline does fall underneath our 1 to 2 week volatility pivot, which is also a key level that we want to hold for those higher time frames around 29,000 to approximately $28,400. And then if we have a scary wick lower somewhere in that $27,000 neighborhood, well, it's going to just scare the living bejesus out of people, but it won't be that terrible. Now, last episode, I was talking about a potential failed retest of this parallel channel that we had here. And in fact, we did get a pop-up and a failed retest. We are still embedded underneath the Bollinger Band's midline. And so for the time being, we are just on pullback alert until we flip above, approximately, let's just say 30,100-ish, and I wouldn't be too cocky about it until we're over around 30,400, 30,450 solidly, and it may even be a little bit higher than that, maybe 550 if we want to get back into that parallel channel. Until then, we are just in that bearish retest, and that could take us to the lows of this support zone that we have here on this broadening wedge, this megaphone pattern here, or we could again test the 1 to 2 week volatility pivots or the weekly Bollinger Bands midline, that kind of bull market midline there, that line in the sand, and that would again just shake out a lot of money from the market, liquidate them, and then perhaps we would have the opportunity to pump. Now, I'm not one who thinks that this market is necessarily going to turn around, but if we do just think historically, then it is possible that we could have reached some point where we are going to enter a new consolidation phase for, again, what I said, like maybe 3 to 6 months, and that would be very typical. So I've been trying to warn you about this for the last, I don't know, 1 to 2 weeks, just kind of nudging and hinting at it in every episode, while still maintaining my bullishness, because again, we still are in a bull market posture, and we shouldn't just assume that we are going to dump. That's the wrong perspective. You should have, standards, kind of mechanical lines in the sand, if it will. And so I've drawn these lines. I have multiple standards. I have us either, first breaking down from this broadening wedge, then we have to violate the volatility pivot, and then we have to violate the weekly Bollinger Bands midline. And so, guys, if we're not doing that, then I can't be bearish. I have to still have my bullish perspective on, because we could easily do something like this, and just kind of chop down here, scary wick, come back up, higher low, and then just, moon time, okay? And we've done this before, right? We've done this before. And of course, to some degree, we did it here, right? Just in a different, just took a little bit longer. So, you know, people who just want to look down, I think that it's just not how trading works, guys. You have to be open-minded to both directions, and you have to have just a mechanical way of looking at price action. And for me, these are my lines in the sand. These are all buying opportunities for me. This whole area here, this whole kind of a bullish accumulation wedge type area in here is just a buying opportunity for me, should we be blessed with that opportunity to buy in there. Now, underneath it, right? Underneath it, then I'm going to be, something's something's a little bit off here, especially if price starts consolidating underneath there as opposed to rising up. Okay, so guys, those are my mechanical lines in the sand. Just very numbers based. It has nothing to do with my feelings. Okay, and I hope that you trade in a similar fashion. Now, guys, we can go ahead and take a look at some of these older key levels that we did put out there. And you can see this was one of our previous ones, just for transparency, where we did have the alpha momentum pool up here that did lead to the bearish breakdown and the retest. We never re-entered the pool. And so again, guys, like the alpha fam is absolutely killing it, because if you respected the pool, you would have seen under the volatility pivot under the pool, it suggested a bearish breakdown. Here we have another setup that we had probably a week and a half ago, 2 weeks ago, and you can see that this was right off of this candle that exploded. Now here we had the pivot down here, and we had the pool top up here, above the pool, above the pivot, and we just exploded to the upside. So again, the alpha fam just killing it, guys. Over here, we can see the top of this formation where we actually tapped the top of the broadening wedge. And then what happened when we broke down into the pool? Well, what would you expect? We ended up swimming to the other side, and in swimming to the other side and breaking down, that was, of course, just an epic shorting opportunity, especially when we lost that volatility pivot. It did not hold. We just cut straight through it. And that suggested when we bounced back up and didn't affirm it, that again, this was going to be a bearish retest. So guys, like if you just respect the key levels that I put on the chart for you, you should be doing very well in your trading. Now let me go ahead and give you some updated daily levels just for your benefit there. And you can see that currently we are underneath the pivot and underneath the pool. So that is a dangerous area. And that's why that shorting opportunity potentially still exists, especially as we're underneath the Bollinger Band's midline on the daily there after this bearish retest of our parallel channel that we broke down from, guys. Okay. We do have support under us right here around this 29 500-ish area. And then again, also somewhere around this 29, and then underneath there, we're actually going to fall into the bearish control zone around 28, 650. So we don't really want to get any lower than that. Maybe again, like I said, flash wick and then quickly putting in some higher lows. But how do we get out of this? Well, we get out of that by just changing our momentum here and popping back up into the pool above 29,908, and then quickly grabbing this volatility pivot around 30,055. That would put us back above the Bollinger Band midline, and that would give us the best chance to get up to the top of the pool, where if we do get above this 30,306, we'd be above the pivot, above the pool, and that could give us a nice play opportunity to the bullish control zone, at least here somewhere around 31,200, putting us in the middle of this this parallel channel right here that we had been in for so long. And if we were able to get back into the middle of it, essentially capturing 50% of that parallel channel, then that does suggest that we could potentially go the rest of the way, at least to that 32,000. So, that's the series of events that need to happen for us to, basically push forward. And those are the key levels that you should be looking for on the daily. Now, if you do want just a little bit of a tighter time structure, we can drop down to the 6-day. And on the 6-day, you can just see a little bit more detail of all of this. And we can also see the historical ranges would put us down at perhaps another drop towards a 29,500, if not that pop up to 31,500. But yeah, let's go ahead and just put the new 6-hour key levels on there. And we can see that we are still, technically above this volatility pivot at 29,817 on the 6-hour, but we did have a second bearish retest of this Bollinger Band midline. In fact, we have just been getting rejected off of this Bollinger Band midline on the 6-hour. But here's the thing. We've never let go of it. Okay, so kind of like just a little alpha monkey here, we've just been kind of like swinging on the branch, right? Just kind of swinging branch to branch, and we're just kind of like swinging on this Bollinger Band midline. If you can just imagine, these are a couple monkeys there, just swinging on the branches, and so I don't usually consider us as having lost an area unless we really have candle structure far away from there. But look, when we did get far away, we popped right back up. In fact, we popped up quite strongly. So price action is still hanging on to the 6 hour Bollinger Band midline, and I don't consider that we've lost it yet. Now, if we did drop into this area, then I would say that, yeah, we lost it. But right now, there's still that opportunity for us to pop up here on the top of this neutral point of control above 30,000, basically 75. And should we be able to do that? Yeah, I would think that we were in striking distance of the alpha energy, which is the measure of intensity of a move above 30,328. That would have our back, and that would give us a great chance of capturing the bullish control zone at 30,628, which would squarely put us back into that parallel channel, which then could just carry us home to that 32,000. So again, like we're still in the game here, Alfam, and we haven't lost this yet. And in fact, if we just got some type of a flash wick here and pop back up into that structure, then, we did it here, right? Kept going, we could do it again and keep going. So again, just to be open-minded to both potentials. Let's go ahead and just do a little bit of a review of the 6 hour like we did with the daily, because I just want to show you, again, the proof is in the pudding, guys, whether these key levels work or not. Look right here on this episode, I was showing you the momentum pool here and the volatility pivot. We weren't able to get on top of the momentum pool solidly. We lost the pool, we lost the pivot, and that was just your opportunity to short. We retested the pool bearishly. Again, this is how I knew that we were going to break down. That's why I suggested the bearish retest was possible, just because of these key levels. And if we go back here, even prior to that, again, similar to the day, we were right here on this candle, right at the bottom of this blue candle right here, when we were able to capture the momentum pool on this setup, and that just rocketed us all the way up to around 32,000, where we did end up eventually breaking down off of the 6 hour pool where, of course we had a nice retracement, but then we got into the pool, and that just suggests we're going to swim to the other side. We lost the volatility pivot and we lost the bottom of the pool. That was just an epic shorting opportunity. And if you had shorted off of the re-entry of the pool after that momentum shift, right, pushing up, and then we come back down, re-enter the pool, that's your shorting opportunity. This would have been an epic shorting opportunity, guys. And some of you don't understand the system, but it's really that simple. I'm not making it overly complicated or anything. It is a unique system, but that would have been an extremely clean entry. You never got stopped out there. It was just all profit all the way down, guys. Let's go ahead and just take a look at the next one here. And you can see that this was the one that actually popped us up to retest bearishly there after that breakdown. And so you got that candle right there that did pop us back up. And so you had a longing opportunity. Again, very clean candles. You don't get stopped out. You just hit resistance, that diagonal resistance. And that's where you took your profit right there at that neutral point of control. And then if you did take that trade, well, congratulations, Alpha Fam. You guys are absolutely killing it. I think I'm going to end it there, guys. You have your key levels for the day. That's your alpha. Stay safe and happy trading.